Hello friends, Vladimir here with you. Welcome to our weekly review, 4th of July 2011. First of all, I would like to start with wishing happy holiday and happy Independence Day all our US followers, all my US friends, all my US community friends. I wish you only the best. Enjoy this holiday with your families, with your friends, with all the country. Second thing I want to remind you, it is the beginning of July. It means we are in the summer. What does it mean? During summer, as you know, July and August mainly, some of September as well, many traders are out of the market. They begin to get out of the market, and the market tends to be volumeless and very difficult to predict. It's very important to remember that and to stay with very small risks. That's another thing. Plus, the first week of July provide us with very many important fundamental things. For example, as you can see, it's a cash rate week. It's actually interest rate week. What do I mean? For example, we begin on Tuesday with Australia, right? Then we go all the way for Britain and Europe for their official bank rate. And if that's not enough, on Friday it's non-farm payrolls for Canada and US. So very important week fundamentally. So that's why we must stay careful. Previous week I discussed about everything that actually involved with the Canadian, with the franc. With the franc, dollar franc. This week I am going to discuss about a little longer terms, plus some interesting things for the upcoming week. Once again, as you saw the importance of the fundamental news. That means it's very hard to predict. We just can analyze now, but then we have to follow the market to see how our expectations actually goes. So first of all, I would like to start with Australian against the franc. It opens the Bollinger Band. It actually stopped on the first resistance here with 50 MA. Probably it will go and make some correction, but I believe it should continue up at least to 0.93 and 0.94 as possible targets. I do believe we are going now all the way for this downtrend line, which should meet us at the end around 0.94, which also will be the 200 moving average of the daily chart. Well, it all because of the franc, dollar franc. Also, I expect to go up more and more. The daily chart still sits on the downtrend line, so it would not be easy. We discussed about an aggressive entry on the live room with the break of the short-term trend line. Here we go all the way for the daily uptrend line, right? The break above this line and cross of the 50 of the RSI would provide with the final call up. If that's happened, my targets would be 0.88 all the way to parity level, to possible parity level. It should take several more days, maybe probably even weeks, not days, but it looks like the current trend. Of course, there will be once again corrections. It will not be straight all the way, but that's how it looks like. I am bullish for all depends on the dollar franc. About the Swiss yen we discussed, as you can see that the weekly chart ends with a critical key reversal here with also bearish inverted hammer right on the critical area we discussed in between 97 to 98. Bam, aiming down. I still believe 94.30 would be reached during the next weeks. Maybe even lower. But let's first reach the 94.30 to see how we continue further. Once again, I am bearish actually for the Swiss franc currency. All depends on it. Now let's see other interesting things. Euro dollar. Let me just erase those lines, and here, alright, here we go. We see a weekly kicker up. RSI stayed positive. Well, it looks like the euro is about to continue. After the Greece vote, it looks like the market does not have anything that could stop him in a moment. Of course, there will be corrections. It will go up and down, up and down, up and down, of course. But the main trend stayed up. And it looks like the euro is going to reach 148 at least once again. Maybe probably it will go to 150 and maybe even 152, which is also investors' targets. But I am bullish, by the way. Okay, if it's not, if I was not clear, I am bullish for the euro long run. But I think this is the last run of the euro dollar, because I believe it is going to create the final divergence here in several weeks. And then complete a critical divergence, and then bam, all the way down again. So I am bullish as for now. If you go to the daily chart, there is also a triangle, as you can see. There is also a triangle limits, right? Boundaries here, right? It should break it up and continue all the way up. If it happens, that would be a good call to continue with the euro. On the short term, by the way, there is a divergence here, right? It should, well, it will be classical if it moves little up again and then bam, cross down again to complete the stochastic divergence here and drop down. I do believe it will correct for the short term, but long run we are going to see good ride up. That's about the euro. What else do we have here? Dollar Canadian also has this block on 0.99, a little below, and what a kicker down. It is a bearish call for dollar Canadian. It looks like we are going all the way for the previous low of 92, which is actually also confirmed on the daily chart, as you can see, right? Also confirmed on the daily chart here with this direct drop down. Of course, I believe we will have corrections. Actually, it looked like during Friday that the correction will begin here. It dropped after bad news, and now it looks like a new divergence will be created, and then the correction will begin. But long run, dollar Canadian is aiming down. There is no question about it. New Zealandian dollar also looks like up. Also looks like still up, but very limited. Very limited, as there is a daily divergence here which should change the direction at the end. So I would not have the buy anymore, because I think it's limited. It could go 100, maybe 200 more. I can't imagine more. It looks too bearish for me very soon. Also, few just a second, let me erase those lines. A few interesting pairs to follow: British pound against the New Zealandian. British pound against the New Zealandian. Watch the monthly divergence. This pair is getting ready for a retrace and change of direction. Stay tuned. If you go to the weekly chart, also we still right down, but see the stochastic also aiming to create a bullish divergence. So I believe that during the next months, British pound New Zealandian will change its direction for bullish move. Euro British pound, the investors went down 0.90, so it looks good. On the weekly chart, the divergence is still here. Well, I prefer still to stay careful and see when the daily divergence will be completed. If we count waves, it is 1, 2, 3. Of course, it looks like we're going to see 4, but then probably 5th, and then the market should change its direction. So yeah, I think the Euro British Pound will correct, but it will be limited from my point of view, as long as it holds the 20 moving average of the daily chart, the daily Bollinger Band, then up, and then complete a final divergence and goes down. That's how it looks like. Yes, I believe in short-term corrections, but I don't think it's actually already the big turnaround. Well, and those are all my favorites. Once again, all the franc pairs, I am bearish for the currency, the franc of the currency, Swiss franc. So actually all the pairs looks up except the Swiss yen, of course, that is aiming down actually. What about interesting commodities and indices? S&P 500 also broke the downtrend line, opened the Bollinger Band. It looks up, I believe. Also the weekly chart, you see the weekly chart, also all looks good, all looks up, and it holded once again the uptrend line here, as we discussed on previous weeks. So I believe, but it's a Marubozu, right? So it should be correction before the up move. If we go for 4-hour charts, you can see that all the ride up, it was 1, 2, 3, 4, short 4, now 5th move, right? It should stop soon and correct itself with the divergences on the MACD histogram and stochastic. So all begins to be very, 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 very interesting here around this area. That's about the S&P 500. Of course, all the indices are the same divergences that should begin the correction very soon. Well, that's how it looks like. And about commodities, especially the gold and the silver, well, if you pay attention for the gold, there is a 4-hour bullish divergence. It's a little risky because it's only 4 hours. The daily is still aiming down. So it is too confusing. I prefer to stay out. I will not touch the gold until the picture will be clearer. Yes, the 4-hour divergence could take it little up, but it could be actually mistaken and then will continue down based on the daily clear down point. You see the down move? It's clear. So it's actually too risky from my point of view. I am still bearish, but we'll see how the gold actually controls itself on the 20 moving average of the weekly chart. For longer term, I remind you, there is still critical uptrend line that we follow. Well, that's all for this week, friends. Once again, happy holiday, happy Independence Day for all our US friends, all our US clients and followers. I wish you only the best. Enjoy this day with your family. It's actually a long weekend, right? So I wish you good luck, friends, and happy trading, profitable trading. Of course, when there are updates, I will update on the blog. Have a beautiful week, and I wish you only the best. Your Vladimir.